What's up, everyone? All right, so I'm going to give you my recap here for today. So finishing the week in the red again today, down $1,928.28. And I had a red day yesterday of 8,400, which was actually, it's actually the biggest red day that I've had in quite a while. I had a an $8,200 red day in October. Another bigger red day there. Well, that was only 6,000 in January. 7,000, I think there, 7,400. So yeah, that's a bigger red day. But at the same time, it's not really that bad. It's only a couple $100 more than that day. So whatever. So yesterday was a red day, which I talked about in my recap. It was totally avoidable. In fact, it was very similar to where I sit right now today, which is that I was down about 2,000 when I did my first recap, and then I kept sitting here watching. And I waited for something to pop up, which was kind of stupid because my window of being really most profitable is between like 8 a.m. and 10 a.m., 7 a.m. to 10 a.m. So outside that window, my risk is higher because I just typically don't trade as well outside that window. And RKDA, although it did make a nice move, it was choppy getting started. I was early on it, in at 1150. Where was this? I think it was 1150. Maybe it was 1050, and ended up hitting a high there, 1137. But I got stopped out, and then it goes, and then I got back in, and then you look at this and you're like, how could you have possibly lost money on it? Well, that false breakout there was a bad one. Anyways, it wasn't as easy as it might look. So what I should have done yesterday is just locked it up as a $1,200 red day, and I would have been much better off for it if I had that discipline. But I didn't. I overstayed my welcome and I paid the price. So today I have an opportunity to correct, in a way, the mistake I made yesterday, which would be to walk away right now before it gets worse. So going into the weekend, that's what I'm going to do. I'm just going to cut it here at 1900. I'm going to do my recap, then I'm going to shut off my computer, and I'm not going to look at stocks for the rest of the day. So, but it is a red day. And my first trade today was on REVE. REVE, so we didn't really have, as you can tell, a lot on the gap scanner today. It wasn't a super clean day, and I went red on my first trade. REVE, I'll show you the 1 minute chart on this. It squeezed up pre-market, and I got in it at $14.50 as it broke this level right here, and then I added it 15, so it brought my average up to $14.75. And then it goes up to 16, and I was like, I added again. I added 16. In fact, I probably added a little higher. I think my highest add was like 1608. The high was 1622. I brought my cost basis all the way up to 1550. And then look at this flush. Boom. Down to 1321. That was stupid. I mean, being a little hard on myself. But that was aggressive. And maybe I was a little more aggressive because I was red yesterday and I was trying to hit a big win today. But I had a base hit from 14 to 16, 2 points with small size, and I didn't take it off the table. So I saw a bunch of people were green on it, but I was red. I was too aggressive. Next trade was CYTO. CYTO hits the scanners, and the first thing I look at is it a recent reverse split? Is it a SPAC merger, a SPAC, recent IPO, anything like that? And it wasn't, so I was like, I don't know about it. But it popped up here, and I took my first trade at about 350. It hits a high of 4 right here, and then it drops down to 376. It was a little touch and go. The price action was a little tricky on it. Hit a high of 416 actually on this candle, and then it drops down. It was. I'll show you the 10-second chart because this was kind of weird price action. It felt like as soon as it popped up, there were sellers ready to start selling. So here it goes from 350. So I got in right there as it broke 350. It hits 4 on this candle, and then the next candle opens at 350, right? So it's 4 and then right back to 350. And then back up to 404, hit a high of 416, and then right back to 380, 375. And then back up double top, back down. It breaks through 415, and I added up here. It goes to 425, 450, 460. And on this one, I was up $1,500. So I actually made back my losses, and I was green on the day by $300. So I was up $1,800. And then it drops down. I gave back a little bit on this red candle, which was a nasty flush. I was looking for the squeeze to 5 and it flushes down. So now I'm up like $600 on it. Sells off, comes back up, drops down, comes back up, drops down, pops up here, pulls back. Right here, I add it at like 485, 495, adding at 5. Flush on this candle all the way back down to 450. Whoa. And that put me red on the stock by $288. You know, again, like none of this is like really consequential. We're not talking about big money here on any of these trades today. It's not like, you know, $20,000, $30,000. I mean, it's really small stuff, but it is annoying. So anyways, it ends up doing a couple of nasty rejections. And so then it just fades at the open. There's a lot of selling on this one. Look at that rejection right there. A lot of selling. So they do, I believe, have a shelf registration. We were looking at this earlier. Let me check the date on it. CYTO. So are we going to see a secondary offering? Maybe. I don't know. Seems kind of sketchy. Just news comes out and immediately tons of selling. I don't know. So anyways, that's CYTO. AMAM is the third one I'm red on by $100. Took a daily setup on that, but look at that rejection. I actually took the first trade here. It rejected. Came back up and tried again and then rejected even harder. I'm glad I didn't get in that one. So, you know what? Today wasn't the day. It wasn't happening today. And my window has closed based on the time when I usually make the most money. So I'm down $1,900. It doesn't really, you know, matter too much. That is what it is. And I'll live to trade another day. One of the things that is important for me is putting it in perspective and being able to look at P&Ls like this, you know, over the last 90 days, you know, $175,000 of profit every 3 months, you know, that's pretty good. If I look back, you know, if I just go to my detailed here of my P&L, 12 million, you know, $151,000 gross profit. All right. Profit loss ratio, you know, whatever, accuracy, whatever. So I look at those things as a reminder to not sweat the small stuff. This is just small. All of this is small. You know, this was a nice green day, 18,000. And this was a little bit of a bigger red day, which was avoidable had I walked away when I should have. I overstayed my welcome and I paid the price for that. Okay, so I paid a price of about $7,000, $6,000. I was down 2,000 and, you know, made the loss 4 times bigger. So I paid a price of $6,000 for that loss yesterday, and I'm going to turn that into a lesson and not do it again today. All right, so I got a little complacent yesterday, paid the price for it. That was after having a nice green stretch. Sometimes that can happen. You get a little sloppy if you've had a nice green stretch because you're thinking, I'm winning. I keep, you know, even if I maybe am not being as disciplined as I could, I keep making money. So I'm just going to keep trading, and then it catches up to you. All right, that's inevitable. That's going to happen to everyone. So that happened to me a little bit, and now it's time to, you know, button it down, tighten it up today. Unfortunate that I had 3 red trades in a row, basically. Well, it wasn't exactly 3 red trades in a row, but I'm red on 3 out of 3 stocks. So that's disappointing. But again, like, you know, it is what it is. So the important thing here, I think, for every trader is to look back at big picture stuff. And if you're not able to look back at big picture stuff, if all you have is the steady decline, then that's something to think about very carefully. What am I doing right now? Maybe I shouldn't be trading with real money. Maybe I should be stepping back big time into a simulator, because it's when you build this type of, you know, if you can build these types of metrics in a simulator, then when you're trading with real money, the first time you're losing, you look back at these metrics and you're like, I'm still the trader who did this. I know I can recover, right? I know I can recover from these losses. This is just in the last 90 days. You know, I mean, we could look at the last, I don't know, 2 years. Let's see, 2020. So let's just look at detailed here. And hopefully I do feel better next week, you know, and this isn't really, it's hard to tell. It gets all kind of compressed. But I mean, there's some big drawdowns in there. You know, there was a drawdown I had of $300,000 and I was able to recover it. There's one of $150,000 and I recovered. There's another one of $100,000, $36,000, $16,000, $18,000. So drawdowns happen, losses happen. And the more you have those metrics that you can look back at and be like, yeah, I'm the trader who recovered from that loss, it's a big confidence booster. If you're a beginner trader, you build those metrics in a simulator. That way, when you flip the switch and you trade with real money, you have something that's giving you the justification to continue on even after having a couple of red days. So that's it for me. That's the week. Ends up being more or less a break-even week. I was green on Monday and Tuesday, 3,800 and 5,600. Green on Wednesday by 1,500, and then red on Thursday, red on Friday. So I'm red on the month of March right now. Not fun. It's actually going to be the first month this year that I've gone red before going green. Just went green in January, went green in February. But then, of course, in February, middle of the month, I gave back most of my profit. So recovered it by the end of the month. But anyway, so I've got a little bit of work to do this month. I've put myself in a little bit of a hole, but it's not too bad. And I'm sure I'll bounce back because it's, first of all, I have no question that I'll bounce back, but it's very early in the month. So, you know, hopefully we have some better opportunities as the month goes on. That's the tough thing today is your leading gap or CYTO had a ton of selling. Some weird stuff was going on it, kind of shady. HUBC, there was nothing interesting there. No range, just impossible. SEER floats too high. ARDX floats too high. HPX, big spreads, higher price. That's going to be a risky stock to trade. I'd be very, very cautious on something like that. You could, I mean, you know, it obviously popped up, but boy, you get one like that going the wrong way and it's going to hurt with the spreads. So the ones that I do well on, and if we looked at earlier in the week, on Monday and Tuesday, you know, I had a couple good days. I was trading, you know, for the most part at that time, stocks that were leading gappers, gainers, and were also clean. CDIO, this was really clean earlier in the week, right? So maybe we don't get those every day in this market, but if I can get them a couple times a week and then have the discipline to button up, you know, and close up shop when things are cold, I'll have a good month of March. So anyways, starting in the red, but lots of time to recover. So that's it for me, and I'll be back at it first thing Monday morning. Reminder as always that trading is risky. My results are not typical, and there's no guarantee you'll find success. Whether you trade on your own or you learn from me, so take it slow and practice in a simulator before you put real money on the line. I'll see you guys back here on Monday morning.